Hey guys, Dr. Adam Coughran here. Let me ask you a question. If you could make your money start working for you so that it buys back a little of your time each month, would you? The good news is that anyone can become a passive part owner of real businesses through investing. By the end of this video, you'll learn how $1,000 can start generating a steady stream of reliable passive income for you without going out and managing and operating a business yourself. Welcome to the Dividend Dentist, where I help you achieve true financial independence and time freedom with passive income. So let's get started. So I want to start out with an idea that we've discussed in other videos. And that is, think about the way that you earn your income on a regular basis. If all of your income is produced through labor at a job, you're operating in a business. The problem is, if you stop working, the income stops too. I want you to start shifting your focus over time from laboring for income as a worker in a business to owning part of a system that produces income for you as an investor. Now, in the case of stocks, this is simply called becoming a shareholder of a company. When you buy shares of a company, you now own a small slice of that business as a passive investor. Now, as the investor, let's talk about how you get paid. As the business grows over time and continues to earn profits, it may choose to share a portion of those profits with you, the shareholder, in the form of dividends. Simply defined, a dividend is your share of a company's profits that are paid out to you just for being an owner, without actively showing up and working in the business day to day. Now, an important thing to note, these dividends are real cash payments that are paid out to you on a regular basis, usually monthly or quarterly. Now we need to talk about what type of companies tend to pay dividends. I like to think of your dividend-paying companies as your stable, big and boring companies that have been around for a long time and typically have well-established brands. Now, it's important to note that not all companies pay dividends. These are often called growth companies or growth stocks. And these types of companies tend to reinvest any profits that they earn back into the business instead of paying them out to you, the shareholder. The reason for doing this is often to help the company expand and ultimately grow its market value over time. In simple terms, this just means that instead of getting paid regular dividends, when you invest in growth companies, you're just hoping that your shares will be worth more over time in the future than what you paid for them, in case you decide to sell at a later date. Now we'll discuss investing for dividends versus growth in future videos, but let's focus on dividend-paying companies for the sake of our example. Because remember, our ultimate goal is a stable and growing passive income stream without needing to sell anything to get our money back, like you would with growth stocks. Now let's move on to our example. Let's say we invest $1,000 into a generic company that we'll call Company X. Now, let's just say that Company X has a dividend yield of 5%. A dividend yield is simply the amount that you hope to get back in dividends based on your investment. This means that for every $1,000 investment into Company X, we're hoping to get $50 per year, or divided by 12, comes out to $4.16 per month in dividends. Now, I already know what you're thinking. That isn't a lot of money, and you would be correct. But think about it like this. It's not about the amount being small, especially at first, but rather what it represents. And ultimately, that's proof of ownership. And it's not some get-rich-quick scheme. Because again, like we discussed at the beginning of this video, you've taken the first step towards shifting from laboring for income as a worker to owning part of a system that produces income for you as an investor without active involvement in the business. Now, I do want to discuss a few more caveats to this that'll hopefully put your mind at ease. Remember how I said many dividend companies tend to grow over time. Many of these companies have been increasing their dividends year after year for decades even without interruption. Think about what this means for you as the investor. This means that you're essentially getting a raise every year without doing anything active in the business other than being a part owner. And if the company does well and continues to grow over time, the value of your shares tend to grow over time as well. Also, many people aren't aware of this. A dividend is only one stream of income, that we can earn as a shareholder of any given stock or fund. There's also other ways to earn additional streams of income through the options market by becoming what I like to call a stock market landlord. This can range from things like promising to buy shares of a stock or a fund that you want to own anyway through what we call a cash secured put. Or on the other hand, promising to sell shares of a stock or a fund that you already own anyway if it reaches a certain price through what we call a covered call. But more on these strategies in future videos. So lastly, I'll leave you with this. That $4.16 per month may not sound like a lot right now, but as you keep reinvesting that income over time and slowly start implementing some of those other strategies that I mentioned earlier, you can really start building a substantial stream of passive income that over time can be used to cover your monthly living expenses. Eventually, this will allow you to regain control of your time, your future, and your financial freedom. So just remember this, when you have the right mindset, the money will follow. If you like today's content, please remember to like and subscribe. I'd really appreciate it. Also, let me know in the comments below, what would an extra $50 per year mean for you? How much of your time could you slowly start to buy back with passive income? Thanks again, guys. I'll see you next time.